Chapter 11, S2 chart examples. At this point, we should understand exactly what an S2 trade looks like between the TDI, the EMAs, the candlesticks, the three different time frames, the time of day that we're looking to trade. Every piece of the S2 has been presented to you up to this point in the course. In this chapter, I'm going to show you separately entries on the 5 minute, exactly what they look like. I'm going to show you entries on the 1 minute, exactly what they look like. And I'm also going to show you what an entry on all three time frames looks like. So let's begin with the 1 minute. So here, in example number 1, we have an S2 trade here on the 1 minute chart. This is identifiable by seeing that the liquid 50 has been in the sell zone all day. On the 15-minute chart, the RSI has not hit oversold, and we have the RSI coming through the liquid 50 in the sell zone underneath the trend line nicely at the time of the same exact RSI liquid 50 cross on the smaller time frame. If you look at the 5 minute, you do not have a RSI crossing the liquid 50. The liquid 50 is actually in the buy zone at this point. It is coming down, but it is in the buy zone at the time of entry. That's not something that would keep us out of the trade because you are getting the S2 confirmation on the shorter time frame, the 1 minute, and it's opened by the 15-minute window here. On the candles, it's confirmed with the break of this short-term uptrend line that's confirmed on the RSI and the candles. You can see we have structure points at the bottom of the candles and the middle of the candles, bottom of the RSI, middle of the RSI. And this is a shift candle and then a 2-candle railroad. That's what I have boxed in here. You can see that right leg closes lower than the left leg. That's right after the 8 and 13 cross happens right here. This is also coming off of the 50 EMA, which is another strong EMA that we look to take trades off of. And when you enter in a trade like this, you can see clearly I have a 7.3 pip stop loss marked here that never gets hit. However, if you were, and of course this is in hindsight, if you were just trying to be conservative, you could really just put it right above those EMAs, right above the 50 EMA. So even 8 or 9 pips, you're getting 29, 30 pips out of this move here through the support pivot point. You can see that's this white line, like faint purple line going across the screen. You're getting the move straight through that for 30 pips, only risking 7, 8, even 10. It's 3-1 at that point. So yes, every trade you should be getting taken out at 15 pips, but the potential for more is going to be there. And you're going to see that as each trade example goes on. Take note as well that a lot of the time when you have a good S2 trade, and in the next chapter we're going to go over bad S2 trades, like trades that you would not want to be involved in, but if you have a good S2 trade like we have here, the 1 minute price action will never really, it might test it for a minute or two, but it will never actually break through the 200 EMA on the 1 minute chart. The 200 EMA on the 1 minute chart is the 13 EMA on the 15-minute chart. So if you remember back to the chapter about exit strategies, I explained that if the candles on the 15-minute chart break the 13 EMA, then we would want to pull the trade out. So if the 1 minute candles break the 200 EMA, which is the Mayo, the white line, then that would be the same thing as breaking the 13 EMA on the 15 minute. Do you see the correlation? So it doesn't matter what time frame you're looking at, the EMAs still have the same value as far as how they're weighted by price. They're just colored differently depending on the time frame you're looking at because the periods change no matter what time, depending on the time frame that you're reading. Let's go into the next example. So first on the 15 minute, we can see liquid 50 in the buy zone. RSI does not hit overbought, and we have a clean downtrend line that's identifiable with reaction points on the RSI here and here, candles here and here. Initial high of day is marked off just with the blue line that I drew. And we get an uptrend that breaks out. That looks right about 3 o'clock in the morning. This uptrend starts to move. The RSI starts to move up back towards the liquid 50 after consolidating down near the stationary 50. And as you can see on the 1 minute, from like 4 a.m. on, the liquid 50 was just clearly clean in the buy zone, oscillating in the buy zone very nicely. You get tons of RSI crosses, but you wait for the proper one. How do you know which one of these short-term RSI liquid 50 crosses on the 1 minute is the proper entry? The answer is by waiting for the 15-minute RSI to be in the proper position. So as you get this rocky formation on the candles, you see with the right arm closing higher than the previous 2 candle bodies, that's that Rocky Balboa putting his arms up. It's breaking the structure line off the uptrend line. That's all confirmable structure on the RSI, so we know it's solid structure. Remember, when it's candles matching RSI, it's solid structure. You get the candle formation through the solid structure, headed to the initial high of day, which gets bodied, of course, in the next 15 minutes. That's why you get this huge move, meaning it puts a body through it. That's how you know that this is the proper short-term time frame entry here at 518, because the RSI finally, after this three candle formation, or excuse me, as this three candle formation closes at 518, you get the RSI above the liquid 50, above the trend line in the buy zone without the RSI hitting overbought. So all the parameters line up. The only thing you don't have is a 5-minute RSI liquid 50 cross. However, just like in the previous example, you have the RSI crossing the trend line and the liquid 50 moving in the direction that you want it to move, which here is up. We can see that it crossed into the buy zone a couple hours beforehand. In this example, again, another uptrend, liquid 50 in the buy zone. Structure lines are matched with reaction points on the TDI and on the candles. Candles break, price action breaks through this top structure line after the RSI has already broken through it as well here. The RSI turns up, comes through the liquid 50, comes through the trend line on the 15-minute candle formation, 3-candle Rocky, right arm is higher, multiple 1-minute S2 entries. 5-minute is in the buy zone as well, even more confirmation. You get 17, 18 pips of pop before some consolidation. The shaking that you see here, this 3-candle, very, very large Rocky formation, that's some type of news event. I'm not sure what it was. It was after 1 o'clock in the afternoon, so I would definitely not be trading. That's why I only measured this to 17 pips. But you can still see this hits your 15 pips within, look, you're in the trade at 11:30, you're out of the trade by 12:15. Quick breakouts. That's how you identify them. It's with the RSI crossing the liquid 50 in the proper zone once the window is open on the 15-minute. You can't just go trading every 1-minute RSI cross. You'll lose way more than you'll win. You have to wait for the right positioning on the 15-minute TDI and candles. Another example, structure lines. We can see we're in an uptrend, liquid 50 in the buy zone, RSI very nicely above the trend line, crossing through the structure, crossing through the liquid 50. So this is a shift candle, as you can see on the candles. Excuse me, not a railroad. 5-minute, no short-term cross. However, on the 1-minute, at 3:34 and then a little bit before 4 a.m., 2 S2 entries right there during the shift. So as you shift the zone off the 13, off the 50 EMA, you're moving towards resistance 1 pivot, and it moves right through it, over 100 pips in this move, right through those 2 pivot points. So again, it's based off this RSI cross on the 1-minute chart or the 5-minute. In these examples, I'm only showing you 1-minute entries. Notice the 5-minute though. Here, it's slightly in the sell zone, but does pull up. So you will find times where you only get 2 out of the 3 time frames to present entries, and that's good enough. There's 109 pips in this move. You're gonna have to take some risks. Trading is risky from the beginning, so don't hesitate. These S2 crosses are solid. If your 15-minute window is open and you get a cross on the shorter term time frames or more than one shorter term time frame, be confident in that S2 entry. The back testing proves it to us. Another example, this is a trade during the Asian session, liquid 50 in the sell zone, 1-minute cross at 21:47. So that would be a little bit before midnight. This is coming right off a shift candle through the 50 and the 200 and the 13 and the 8 EMA. You can see this is a shift of the zone. We body through the 200 EMA. It drops 18, in 18 bars, it drops 11 pips. So in about 4 hours and 30 minutes, it drops only 10 pips. But if you hold all day, you got 32.4 pips in it potentially for you from the original S2 entry back here before midnight. 5-minute drops into the sell zone and probably stays in the sell zone all day, even through the pullback here. The 5 minutes a really good time frame that I don't think people pay enough attention to, especially for day traders, because 1 minute is very quick and 15-minute is sometimes very long. The 5 minutes a really good indicator of what's going on. So that's why we need to use all three and pay attention to them. Now let's get into some 5-minute entry examples. So all of these chart markups are going to be 15-minute entries with only the 5-minute crossing, not the 1-minute. I want you to pay attention to the positioning of the 1-minute at the time of the 5-minute crosses. So here we have clear downtrend, liquid 50 drops into the sell zone on the 15-minute. We have structure, short-term uptrend with the pink line on the RSI, confirmed on the candles. Overall downtrend with my blue line here on the TDI, matched on the candles. Rocky formation, off the EMAs, off the structure line, RSI coming through the trend line, holding under the liquid 50. No 1 minute entry. However, like I said back when we first started talking about railroads, the shorter term time frame entry that you will see more often than not is only the 5 minute cross. So when you're anticipating a railroad, meaning if this is making a pullback to the 13 EMA and you're like, listen, if this is going to make another drop, it's going to hold the 13 EMA and push down. And if you're anticipating that railroad, you would be looking for a 5 minute cross. And here at 3:15 in the morning, you get the RSI coming through the liquid 50 in the right zone, in the sell zone, with the trend line in the correct position. 1 minute quickly drops into the sell zone, hits oversold, drops a little further, but this is a pain-free breakout trade that holds that 200 EMA on the 1 minute as well. This is in at 3:15. You're out before 4 a.m., around 4 a.m. with 20 pips. Stop loss on this kind of a trade, you could put right at the top of this previous railroad. 9-10 pips at most. There's no reason to give these more than that because they will quickly move into profit. You can see through these markups. The S2 is essentially the breakout of the consolidation zone. So when you're catching the breakout, if you're actually right and it is the breakout, it's going to move into profit very quickly. You should not need to hold these very long. Like I said in the beginning of the course, 30 to 45 minutes. If you're not in profit, pull it. Take it at break even, take the small loss, whatever it is. These trades should move quickly to some extent. And again, you get 20 out of this. That's why your 15 pip stop, take profit is perfect. Here's the pivot point down here. Some of us would get in this trade and be like, oh, it's going to the pivot point. No. You just take the 15 pips. Like, look, here's a great example of why. This only goes 20. Don't push your luck. Trust us in the back testing. We've done this way, way too long to be wrong. So trust us in the back testing that 15 pips is going to get hit more times than not. Another example here, liquid 50 in the buy zone, RSI nicely coming through liquid 50 and trend line at the same time, not overbought. You have a huge Rocky formation, right leg bigger than all the Asian consolidation. So it's like we were breaking out of Asia. Right to yesterday's high of day, you can see I had that marked with the blue line here. Right to yesterday's high of day, consolidates for 15, and then bounces out 140 something, 144, 143 pips if you hold for a few hours. There's no 1 minute cross, but there is a 5 minute cross. Why is there a 5 minute entry? Because, like I said last slide, railroads will have 5 minute entries more times than they will have 1 minute entries. So if you're anticipating a railroad, especially one like this, out of a consolidation range so close to the EMAs, so close to the 13 and the 50 EMA, if you're that close to them, you better be paying attention, especially with a liquid 50 like this. This is clearly in the buy zone. You're just waiting for the long entry. And here it is, 405. As the 15 minute is in the right position and the 5 minute is throwing the entry, they need to confirm each other. You can make this thing come together for a really huge trade. In this example, we have another 15-minute candle railroad formation that breaks for a new high of day, breaking out of confirmation of structure on the RSI and candlesticks. We have a liquid 50 in the buy zone all day, telling us that all we're going to be looking to do is go long, and we wait for the RSI to come through the liquid 50 and the trend line, get in the right position, be confirmed by the breakout of structure that you see, RSI breaking out of the structure, candle breaking out of the structure, moving for a new high of day, railroad that closes with a right leg higher than the rest of the candles, breaking out of the consolidation. You get a 1 minute entry at about 450, and you get a 5 minute cross here at 410. The 5 minute cross is the entry. The 1 minute cross after the fact is the confirmation that you're in a good trade. You're entering on the 5 in this situation and confirming it on the 1. The reason for this is because this 1 minute cross comes when a 15-minute candle is already outside the 8 EMA, which we know is no man's land, and you don't enter there. So you use it as confirmation to stay in the trade. We don't know how much more it could go. We just know that we're in a good trade from the 1 minute cross, but the 5 minute is the entry in this example. In the next example, we have the liquid 50 in the sell zone, so we're looking to sell it. Short-term uptrend confirmed with the pink line on the RSI and on the candles. RSI comes down through that structure line. It's a railroad formation off the 50 with a pin to the 200 EMA, dropping through to create a new low of day within the next candle. RSI through the trend line through the liquid 50. The entry is at 550 on the 5 minute cross. The 1 minute stays into the sell zone, throws the confirmation entry about 40 minutes later, telling you, yep, This is still good to go. You hold through, you can catch a couple more pips. This is only a 10 pip move, but you can see the pivot point was right here. When the pivot point is so close, take the profits. You know it might not break through. Take the profits. And then quickly comes back through and closes through the 8 EMA. And even if you, for some reason, held into the trade and didn't take all your profits here, and you stuck through, but then it pulled all the way back to here, this is only your entry or maybe 1 pip negative. Take the loss. It breaks the 8 and the 13 EMA. This is where you would pull out of the trade. Here, another 5-minute entry. Liquid 50 says buy, clean as day, no overbought, no overbought. Confirmation of structure on the candles and the RSI. RSI coming through the Liquid 50 and the trend line in the buy zone. 5-minute entry at 9:20. Look how nice that is. RSI comes right through, space on the trend line, everything looked good. Ignition bar through the consolidation range, through the pivot point here, through the pivot point. That body through the high of day, body through the pivot point tells us that this is going to continue higher, and that's exactly what it does. 40, 45 pips all the way to the next pivot point you see here at R3. So again, Liquid 50 is saying buy, 5-minute is the entry, off the 13 EMA, confirmed later on with 1-minute crosses after we're outside the 8 EMA saying this is a good trade, enjoy, stay in the trend. Even here, look how this rides outside the 8 EMA and never closes a body back within it until maybe here or maybe here. But even so here, that's still over 20 pips from the original entry. So you're definitely going to get your 15 from these trades. Now I'm going to give you a couple examples of what it looks like when you see the S2 cross on all 3 time frames. So the 15-minute opens the entry window, then you have the cross on the 5-minute and the 1-minute at the same time. In the first example here, we have a Liquid 50 telling us to buy. Triangle structure confirmed on the candles and the RSI. RSI at the time of entry here is coming through the Liquid 50, through the trend line, off the 13 EMA for a new high of day. Oh, I just screwed the screen up. We are not breaking yesterday's high yet, but we did break for a new high of day, which was set back here. So the fact that we're breaking for a new high of day today tells us, okay, the next level of support or resistance is going to be the yesterday's high or yesterday's low. In this example, it's yesterday's high. So with the 1-minute cross at 246 and the 5-minute cross at 245, you have 2 time frames telling you this is a good entry window to jump into. It moves up over 50 pips through the pivot point within, I would say that looks like it takes about 5 or 6 hours. So you're in at about 3 a.m. and you're out at about 9 a.m. Again, that's a big move. You're going to get 15 pips out of this within the first hour. So these trades are quick. If you're not in profit quickly, if it breaks back in within the 13 or the 8 EMA, you might be wrong. So consider taking the quick loss. Here, it comes back to the 13, does not close under the 13, and moves higher, making a railroad formation that I have boxed in as well. The railroad tells us that this continues, this uptrend continues. All these railroad formations are always continuations of trend when you see them off the EMAs with the TDI in the correct position. Here in example number 2, we're in a selling TDI. Liquid 50 says sell. You have a short-term uptrend that I drew with a blue line here, confirmed on the candles, confirmed on the RSI, and it's broken with this huge ignition bar down. Your stop loss will go right at the 50 EMA, which is only 7 pips, right? And clearly this never even goes close to it. You got the 1-minute cross at 349, 5-minute cross at 345, so all coming together in the same 15-minute candle, and boom, 41 pips to the bottom, through 2 pivot points with bodies. So again, everything needs to line up. You want to see the EMAs going in the same direction. TDI tells us to sell. RSI coming through on the 15, find the entry on the shorter term time frame, trust the stop loss above the 13 EMA, above the 50 EMA in this situation, so maybe about 8 to 10 pips plus your spread here. It's only 7 pips, and you're gonna find a winning trade. These S2 trades are incredibly accurate if you wait for the breakout. You do not want to get in early. Wait for the RSI to actually cross through the Liquid 50 in the proper zone like you're seeing in this trade here. In the next example, we have a Liquid 50 dropping towards the stationary 50 but holding into the buy zone. RSI is consolidating higher, so we have matching structure on the candles and the TDI. Broken with the railroad formation here on the 15-minute. You can see that right leg is closing higher than the left leg here. And you have a 1-minute cross at 752 and a 5-minute cross at 750. There's multiple 5-minute entries and multiple 1-minute entries. These are all confirmation that this is a good trade to be in, and it goes 23 pips almost to the pivot point. Almost to the pivot point is the key note. The fact that it doesn't make it there should prove to you even more that taking the 15 pips is always the safe bet. Again, railroad formation, continuation of the uptrend, EMAs are saying buy. We're breaking through the structure. We have a 1 minute cross and a 5 minute cross, and that's why we believe that this is going to pop for at least 15 pips, and it does. Next example, we have liquid 50 in the buy zone. RSI confirming the structure on the candles, so we have solid structure to trade through. We have a rocky formation. Right arm is higher than the consolidation, breaking through the structure that we drew. RSI is breaking through the structure, breaking through the liquid 50, breaking through the trend line all at the same time. You got the 5 minute cross at 9:35, followed closely behind with a 1 minute cross telling us that this is a good trade. So again, all three time frames telling us that this is going to pop, and that's what it does. 50 pips through both pivots. So you get the rocky. 2 candles later, you get a nice push off the ADMA right through the pivot point with a body saying, nope, we're going to the next one. So if you're still in and as you get advanced, you can hold into these trades. You hold through to the next pivot, see what it does when it gets to the next pivot point. It consolidates for 45 minutes, but then throws another body through that pivot point. So where's it going to go? Even higher. And that's how you get over 50 pips out of this trade in this example. But it's confirmed with these entries on the shorter term time frame, so please don't underestimate how powerful these are. And when you get 3 out of the 3 time frames telling you that the trade is going to go in a certain direction, whether it be long or short, you need to be confident in that. You need to be confident in that RSI crossing the liquid 50. That's what's going to give you the confidence to up your lots as time goes on, to take bigger positions and be a profitable long-term trader. You need to be confident. You need to believe in yourself. I'm hoping that all these chart markups that I'm showing you are helping you to believe in yourself. Another example here, 3 for 3 time frame crosses. We have a liquid 50 in the sell zone. During Asia, it moved towards the stationary 50, but did not really get that close. It got to about 48 and then decided to continue coming down, coming lower. RSI comes through the trend line off the liquid 50. You see it kind of kisses off the liquid 50. That's what we used to call that, the kiss off. And then you have the triangle structure formation showing us that the downtrend is being held. EMAs are saying sell. The horizontal pink line shows you that we're in a downtrend. And this is a 3 candle rocky formation that I have boxed in right here, with that right leg coming way lower than the consolidation, breaking for a new low of day. I have initial low of day marked off and yesterday's low, and this 3 candle formation breaks through both of those levels. So that's a really strong indicator to me that this is going to continue to drop. Not only are we getting entries on the 5 minute and the 1 minute exactly at 1:30 in the morning, we're also getting a candle formation on the 15 minute off 2 very important levels we know, yesterday's low and initial low. With the liquid 50 in the right position, everything was lined up. This is something that when you see it enough, when you guys study this enough and you apply it in the VTF and you apply it in your live trading and you rewatch this course, when you see it enough, you just know. You really do. This stop loss can go right above the consolidation. I have it at 6 here. You can put it at 7, 8, whatever. You see, right above the 50 EMA is safe on the 1 minute. It never, if it's right, will go back through the catch-up on the 15 minute. It'll never go through the 13 EMA on the 15 minute, which is equivalent to this 200 EMA on the 1 minute. My last example here for the 3 for 3 time frame crosses, you can see we have yesterday's low marked here, which we break through that in Asia, move and set the initial low right at about 4 a.m. during London, retest yesterday's low, giving us the clean downtrend and the break back through initial low of day right before 9 a.m. So the New York session starts, we retest initial low of day after breaking it at the end of London. So we break London, break through the level during London, we retest at the start of New York, and then we get the drop through. When we see it hold the initial low of day, and we see this beautiful downtrending liquid 50, look how nicely this is holding in the sell zone right at the 40 value. You're just waiting for that RSI to be in the right position. So you have the RSI finally come through the liquid 50, finally come through the trend line at 9:35. There's your 1 minute entry, 5 minute entry as well. All 3 time frames coming off the 13 EMA on the 15 minute, coming off the initial low of day. Everything is telling you that this is going to sell. And if you really can hold this, this is 71 pips to the bottom by the end of the day, through the S2 pivot point all the way to the bottom here, almost making it to the next S3 pivot point. So I hope Now, at the end of this chapter, you can understand individually what a 1-minute cross looks like, what a 5-minute cross looks like, and how they can come together, and how you can actually get S2 entries on all 3 time frames at the same time. And when that happens, those are the money trades. The 2 out of 3 time frame trades are always going to work. They're always still going to be good S2 trades, and you're going to win majority of those trades. However, those 3 out of 3 time frame crosses, those are the trades that you really want to be confident in, especially as you're just getting started. If you can really be picky and identify trades like the one in front of you here that have beautifully trending 15-minute TDIs, and then they have both time frame crosses on the shorter term time frames, the 5-minute and the 1-minute, when you have all that come together, no overbought, no oversold, all of the parameters we've been talking about, I hope that after this chapter you can see that these 3 out of 3 time frame trades are absolutely the best S2 trades that you can take. Now that you understand what good S2 trades look like, I need to explain bad S2 trades. So in the next chapter, I'm going to show you exactly what reset is. I'm going to show you exactly how to not trade inside the Asian range box. I'm going to show you exactly what you need to do in order to not get stuck in trap moves. That's a huge piece to trading. I think more important than the entries and the time frame crosses and this and that is to know what not to trade. People always say, oh, I can go long or short. There's 2 directions I can trade. I disagree with that. I really believe there's 3 types of trades you can make. You can go long, you can go short, or you can't place a trade at all. And not placing a trade, you can go long, you can go short, or you don't have to place a trade at all. And that sometimes is the best trade. So let's get into chapter 12, how to avoid bad trades.